Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamoan, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions. This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how their experienced team can assist you with your mortgage needs. Let's dive into today's episode. Today, we're exploring the most affordable neighborhoods to buy a home in the Greater Toronto Area. Finding a reasonably priced home can indeed be a challenge in this bustling region. However, a new report has highlighted some of the most affordable and expensive neighborhoods to consider. While experts are predicting a rebound in the real estate market in 2025, the market has been somewhat sluggish this past year. In November, the average price of all home types in Mississauga dropped by 8.07%, reaching $994,634. Across the Greater Toronto Area, the median home price was $965,000, based on data collected by the real estate brokerage Wahi from January 1st to November 30th. The report notes that early expectations for a housing market rebound in spring 2024 did not materialize. Prices peaked in 2022, experienced a decline, and have remained relatively flat through 2024. Despite the prevalence of homes around the $1 million mark, there are more affordable pockets within the Greater Toronto Area. For instance, the Elms neighborhood in North Etobicoke boasts a median sale price of under $500,000. Other affordable areas include the Queen Street corridor in Brampton, as well as Flemington Park, Thorncliffe Park, and Bermondsey in Toronto. These neighborhoods offer potential buyers more budget-friendly options without sacrificing the benefits of living in or near the city. On the flip side, the report also identified the 5 most expensive neighborhoods. Unsurprisingly, Toronto's Bridle Path tops the list with a median price nearing $6 million. 2 other Toronto neighborhoods and 2 locations in Oakville also make the list, showcasing the diverse range of housing prices across the region. Now let's delve into this week's top stories, starting with the surge in Canadian mortgage relief measures. The Financial Consumer Agency of Canada, the nation's consumer watchdog, has provided over 8,000 relief measures to mortgage borrowers over the past year. This includes waiving millions in penalties for late payments and eliminating compound interest for those who are over-leveraged. While this assistance is undoubtedly welcomed by many, it does bring to light a significant issue. Many households are struggling to manage their debt loads effectively. This raises questions about recent moves to increase leverage, which may not have been the best course of action given the current financial climate. Shifting our focus to the job market, Canada is currently facing a challenging situation with less than 1 job available for every 2 unemployed job seekers. Despite a surge in immigration driven by the notion of a labor shortage, unemployment rose to 6.8% in November, marking the highest non-pandemic rate since 2017. Meanwhile, the number of vacant jobs has decreased significantly, resulting in more competition among job seekers. This imbalance between job vacancies and the unemployed population highlights the complexities of the Canadian job market and the need for strategic solutions. In other news, the Canadian dollar has taken a hit as the Bank of Canada and the United States Federal Reserve diverge in their monetary policies. While the Bank of Canada recently implemented an emergency rate cut and signaled the possibility of further reductions, the Federal Reserve in the United States has indicated that rate cuts may be coming to an end as their economy heats up. This divergence has led to a weaker Canadian dollar, which is now performing poorly against the US dollar, a situation not commonly seen in the past 2 decades. On the migration front, the appeal of moving to Alberta remains strong, particularly for young Canadians who are leaving expensive provinces like British Columbia and Ontario. According to the Bank of Montreal, Alberta continues to attract core-aged workers at a near-record pace thanks to its robust economy and relatively affordable housing. However, the wave of migration to Nova Scotia has slowed down. Rising home prices and higher tax rates have diminished its appeal as a cost-effective alternative for those looking to relocate from pricier areas. Finally, let's touch on the latest trends in housing costs. Canadian inflation, as measured by the Consumer Price Index, continues to slow, which is a positive indicator for those seeking cheaper credit. However, it also signals a potentially weak economy. Interestingly, the divergence in housing costs is notable. While rate cuts and falling yields have reduced mortgage financing costs, thereby benefiting investors, rental costs continue to rise. This indicates that while purchasing a home might be more affordable, renting remains a costly endeavor. Additionally, Canadian real estate prices have halted their decline, with the benchmark price of homes remaining unchanged in November. This stabilization comes amid increased demand fueled by cheaper mortgages, although the market is not as bustling as it was pre-pandemic. The abundance of inventory and a backdrop of rising unemployment and a declining population outlook suggest that the real estate market is still navigating through some challenging waters. As the holiday season unfolds, many Canadians are considering giving the gift of a down payment to help loved ones take their first steps toward homeownership. This trend has been gaining traction, particularly as rising living costs push more individuals to rely on family support for securing their first mortgage. According to the Canada Mortgage and Housing Corporation's latest consumer survey, 30% of first-time buyers in 2024 received financial gifts to support their down payment. However, Tracy Valco, principal mortgage broker with Valco Financial, notes that from her experience, this number could be as high as 65 to 70%. This highlights the growing reliance on financial gifts, especially in today's challenging economic climate. Interestingly, down payment gifts are not limited to first-time buyers. There's been an uptick in move-up buyers, young families looking to transition into larger homes as their needs evolve. Despite having built up equity, many still find it challenging to afford new homes due to high prices and interest rates. This is where financial gifts come into play, providing much-needed support. Valco points out that the financial strain is exacerbated by tools like the First Home Savings Account, which primarily benefits first-time buyers, leaving others to navigate these pressures without similar assistance. If you're considering gifting a down payment, there are critical factors to keep in mind. First, ensure that the gift is properly disclosed to the broker and prospective lender. While this might add complexity, it helps avoid future issues such as denied applications or unaffordable mortgages. The Canada Mortgage and Housing Corporation survey reveals that the average size of down payment gifts in Canada has risen to $77,487, with high-demand markets like British Columbia seeing averages exceeding $150,000. Clinton Wilkins from the Clinton Wilkins Mortgage Team notes that many first-time buyers are now entering the market with six-figure gifts, shifting the dynamics of mortgage risk profiles. It's also crucial to address how the gift will be handled if the mortgage needs to be unwound, particularly in cases of divorce or asset division. Discussing this with a real estate lawyer can help ensure that intentions are legally documented and binding. Valco emphasizes the importance of these agreements, as disputes often arise during separations when no prior arrangements are made regarding gifted down payments. Lastly, while it's natural to want to help loved ones, it's vital not to jeopardize your own financial stability. Overextending your resources could leave your own financial future at risk. As highlighted by a survey from the Canadian Institute of Actuaries, many Canadians underestimate the financial challenges of retirement, leading to potential overestimations of how much they can afford to gift. Evaluating the impact with a financial planner or mortgage professional is essential to ensure that the gift is both generous and sustainable. For those who are financially secure and have carefully assessed the risks, gifting a down payment can be an incredibly rewarding experience. Clinton Wilkins notes that such gifts enable loved ones to achieve their dream of home ownership, allowing the giver to share in that joy. This sentiment echoes the value of thoughtful and responsible giving, providing a lasting impact on the recipient's life. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate. Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time, and stay informed with the latest industry insights.